The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. This is the Friday edition. Friday, the very last day of January. And, oops, let me just do this again. I should know my password by now. There it goes. And I wanted to show this in a short while. Let me just get there for a second. And I'm going to run down. I'm showing my CD introducing the Chapman Wave methodology. And I want to go to Chapter 17, I believe it is. Yep, so we'll put that aside for now, and I'll explain why. Folks, the Dow is down 122 at 50,726. It was down 220 earlier on, so it's back, come back 100 points. S&P is only down, well, it's down 920 right now. It was down 22 or something like that. Now it's at 1784. Let me just, in fact, let me do this. So I wanted to get to this chart as quickly as possible because this is active. While we're talking, this is a very active moment. Let me quickly do this. The E-minis are down down 2. They went as low as 1761.25. They're trading right now at 1779.50. Look at the wick. Now, one of the things that I look for is the quicker you can go through, let's see, on the upside, the quicker you can go to peak A, B, C, D, the greater your chances of a pullback. It's not a top, just a pullback. Well, it could be a top of sorts, but it is a pullback that should pull back 10, 15%. All right. On the way up, but that's on the way down that we're looking at this particular point. So we've gone, a high was 1846.50 back on the 31st of December. That's so fascinating because the S&P made a nominal new high. In January the 31st, December the 31st, the Dow made its high, all-time high. Now what we're looking at is something very interesting. Why? Because the S&P has gone to trough C, trough D, leg E in a very quick motion. And what we're looking at here is a chance that we could be looking at a little bounce forming. Now, a reason why I wanted to get my CD out, and in fact, it's even more important that I run some of the numbers for you. I don't want to do too many things at once. Finish this off. Okay. So the E-mini 120-minute chart has made that pattern that I call the H pattern. All those H's that on the 120-minute chart. Look, there's an H from 1808 back on the 23rd of January at 2 o'clock. Makes an H, fails, takes out the left side low. Then it comes down to 1771, round number, lots of round numbers. On the 26th, has a peak ABC, very quickly, very small, plunges, takes out the left side low, goes to 1767, another round number low. And that was on the 27th, wasn't it? Yeah, the 27th at 2 o'clock in the afternoon. And what happens? It goes peak ABCD all the way to 1801.25, pulls back, makes a large arch formation, what I call the lowercase h. Now look at this. Remember this, what I always talk about, the H pattern? You come down sharp, usually from a D, E, or F, and you make these little scallops. Look, there's the H, fails. There's the H, fails. There's the H, and then what happens? It turns into an H that goes to an M pattern. Sometimes it's a continuous M pattern. Hey, wait a minute. What do we have here? We have a little H there, another H, a bigger H, and a third H. Now, the rule in the Chapman Wave methodology is when you take out the left side low, you did it twice. You did it back at 1764 on the 29th of January at 4 o'clock. What it says is if you take it out and the very bar that takes the left side low out If that turns around and goes back into the arch formation, then what you could see is a rally, and it could be a sharp rally, but what it is, it's a rally that could test the left side, an arch on the left side. Well, in this particular instance, when it started rallying from the 29th of January, that was the 27th of January, it took out the left side high of 1792, went to 1801.25, plunged to 1764, that was on the 29th, runs up to peak C, and that turns into a C minus. 4 o'clock yesterday, closes, kaplop. In the evening, it comes all the way down. This morning, it goes to 1761.25. What is 1761.25? It is below the left side low of 1764. That says that if the bar closes above that low, even though it went below it, it could, in fact, test a left side peak. Is that a peak 82? Nope. That's a peak right there. 84, yeah, 1784.75. So that's just something to keep in mind. Doesn't say that we're going to go there. Well, we'll have to look at some other things. But in the meantime, I just wanted to show how methodically and how impressively these particular patterns repeat over and over and over again. Now I'm going to just go through the rest. I want to look at gold, GCG. GCG is, in fact, peak D. Finally, you've got the gold contract at peak D, having made a high from the low of 1202.30. It goes to 1279.80. 1279.80. And put that in red. And it's starting to fail. But a failure will only be if the stochastic, which is at 53%, continues lower and the MACD crosses negative with the close for a second out of 3 days. You really want to see two out of 3 days. We've only had, this is the third day of being under the 9 EMA, actually the fourth day of being under the 9 EMA. And this is going to be very important because if it closes under 1249, I would say if gold closes under 1240, the low today is 1238. If it closes under 1242, there's a real good chance that we've got a pullback coming in gold. And look at this, the GLD has in fact made a peak D for the first time. We've been waiting for this. It was out of sync with the Dow itself. So that the gold I'm going to be watching very closely. Let's look at bonds, US H14. Bonds in leg F/A. This could be an instant restart. I got a question from one of our listeners. TLT has crossed the 200 DMA. Is there a play here? Well, I'm not interested in the DMA. I am interested in the EMA, which is at 131.16. That's 131.5. And what I said was that, in fact, what we're looking at here is that the strength in bonds for the first time is coinciding with what we would normally expect to look at when, in fact, the market is tanking. That's what you see. You see money migrate back to a safe haven, and that would be to bonds. Now, when you're coming off a significant low, and for bonds, let's face it, the TLT, let's just jump to the TLT for a moment. The TLT 200-period moving average is a little higher. It's at 108. The trade right now is it's in leg E/A. Could be an instant restart for another brand new move to the upside, which I think is going to happen. And that is in the TLT trading at 108.15, up 59 cents, because the MACD is at 90. The MACD is very strong, hasn't turned down at all. If you look at the histogram, the histograms are still, well, they're slowing down a bit, but they're still looking very good, way above the 0% line. And the stochastic is at 90.71. That is impressive. As long as it stays in the 90s, that's going to be a lot of support for the bonds. Now, could it pull back? Yes. Once you take, look, it's taken so much time. Another technique that I like to look at is the kind of time that it takes to break and then to break either above or below the 200-period moving average, the little orange line here. You can see if you're looking at the charts. And that is very important. Why? Because if you're looking at the Tiger TV, you will see that, in fact, since we broke down back in May of 2013 at about 121. We've gone all the way down to 101.17, and only now, it's the very first time, this little cluster here, coming back to the 200-period moving average. This particular line right there is the 200-period DMA. It's actually about to cross the 200-period EMA is about to cross the DMA. I like when that happens, but it is just, to me, a little confirmation, background confirmation. I would never trade off that. It is just slow. It is just way a lagging indicator. You couldn't get a better lagging indicator because it certainly is a lagging indicator. All right. So that's very positive for bonds, and I suspect that we could hang out a little bit over the next couple of days as the market goes wiggling up and down and up and down, with the 108 being the fulcrum for a trade below to 107 to 106.50 and 109.20 as it wiggles around that area. What's very important is that the 200-period moving average in the weekly is 108.98, and that suggests that bonds want to move higher. I wonder if I can show the trade here. At TY. Look at this. This is E in the 10-year T-note continuous contract. Something's wrong here. That's a 30-year. The chart is of the 30-year. But anyway, it says 10-year T-notes. That's not right. Anyway, this is an E, just like bonds. No, wait, something's wrong. The TY, oh, that must be the trade. That's just the trade itself of the contract. All right, forget that. Let me get out of this before I confuse everybody. This is what we're really looking at, the TLT. And the TLT monthly has made a trough D in January, testing the 9-period moving average. I think that it's going to make an H formation. I would not be surprised to see bonds climb to 112 at some point over the period of February into March. We'll see. It's just a guess. All right. Next thing is crude oil is at 97.87. It's kind of unchanged. High-grade copper. You remember I said high-grade copper is going to the bottom of the channel. No. It's a channel. It is a channel, but I'd rather call it the rectangle formation. And it made the right here. There. The H goes to an M and a continuous M pattern, and that's exactly what's happened. So within the trading band, that's really what I should have said. It's failed to get near the 200-period moving average of 3.49. Copper's telling us there is weakness extant, and we can expect copper to go down to 3.19 to 3.12. It's almost 3.19. 3.12. If it breaks that, next level will be 3.04. And that's what I'm anticipating over the coming months. I haven't even talked about the VIX. I'll talk about it right now. The UVXY spiked up to the 90 area, went to just over 90, and is now trading at 84.61, 6 points off the high. This is the speed with which these things move is quite something. Can you post your yield chart, Basil? I'll show you the yield chart in a moment. I'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're back. Dow's down 134, S&P's down 10, and the futures are only down 350. That's a huge divergence in the futures. I want you to show some things in a short while. I'll do that. So let me do. I had a question about bonds, and I was asked if I would show the yield chart. Now, this is very interesting. There has never been anything more than a peak E in the 30, 10-year, and 5-year yields in the weekly charts going back to that cluster formation right there at 54.08. That was 5.4% back in June of 2007. Cluster formation as those three yields came together. Then they expanded, and the 5-year went all the way down to 11.85, then down to 10.16, down to 5.41. Now they've rallied. This is the first time that they've gone to a peak G, a rare peak G in the 30-year. That's that white one at 39.74, 3.974%. Now look at this. Peak F in the 10-year, and these are 10-year note and 5-year note, and the 5-year, the peak D, and they're pulling back. And if the left side low of 35.65 back on the week of the 25th of October is pierced on a closing basis in this particular chart, and everything looks like it should be, if it's pierced, it's going to go lower, and it could very well go down to 34.58. And that's the yield going down. Isn't that interesting? Now, that was a question. Next question I had, email was, the TLT, Bob asked about the TLT. TLT, I believe, is going higher. Very short term, could be choppy, but I believe it's going higher. Had a question about ATHM, one that's been on my list for a while now. It's an IPO Auto Home Inc. car shopping website. Came out as an IPO, went down to 26 round number low, spiraled up to the 38, so went to peak C at 38.65, 16th of January, and came down and is holding the 200 period moving average. Question is, should I be holding here? What should I do? And I'm going to make the suggestion that because you're in at 33 and it's trading at 30.35, yesterday's low of 28.52, if you held it through that, then I'm going to suggest that it could have a little bit more of a bounce. But if it gets to the 31.29 area, you got no choice but to raise your stop much, much tighter. As it stands right now, I like the actions down 26 cents, ATHM at 30.35. But I must tell you that if it takes out the low of, and I think it will at some point, takes out the low of 29.42, closes under that. No, takes a low of 28.52. It's going to be retesting the low of 26. So be very careful. And so the question is, what should I do? At this particular point, I would make my stop 30.15, somewhere around that. I wanted to break 30 again. 29.11 is the 200-period moving average. If you want to give it a little more room, that's okay, because it should hold the 29.11 area if the market is going to have a little bit of a bounce here. And I think, boy, everything tells me we are so oversold on the very short term. Today was it wasn't a selling climax. It was a certain emotional climax. And I love these climaxes where you take out the low, you come down very sharply. Then you make that H pattern and you take out the low. And that is, your heart just skips a beat if you're long. You just say, oh, my God. And then within moments, that bar goes back into the arch formation. That's the best kind of thing. And I would just consider that it would be good for a rally into early next week if this succeeds and we close down only about 60 or less points in the Dow, less than 5 points down in the S&P. So now let me just finish up with this. So that's the look that I have. Now, I would suggest that if you get out of ATHM Auto Home Inc., that you keep it on your list and wait for a couple of weeks and see how it handles the whole 27 to break into a new low of 25 if it's going to do that. But right now, hold. I would, this is it. On one part of your position, have a trading stop of a point. On the other part of your position, point 29.41. We're trading at 30.51. So 29.41 is one part of your position. The other is a trading 1 point stop where it is right now, 30.48. If it's able today, if it closes over 30.97, the high of yesterday, use a 1 point trading stop on the other half of the position. So, good. I've got a couple of those questions out the way. Now I want to take a moment. I don't often do this. Actually, I haven't done this for absolutely ages. I want to show you the blank chart, what I call the naked chart. I'll be right back with the naked chart straight after these messages. Dow's only down 108. S&P's down 8. Hey, great call, Tom.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. Got a nice email from one of my Master Trader Series participants. Added to longs at bottom and volatility back up. We go. Daily nearing that 200 EMA, so safe bet bounce soon. Jim, congratulations, Jim. Yes, I think that there's a chance, but you got to treat it as trades. As you know, we've been whipping around every single day in a different direction. So this is just that oversold bounce that you got to expect. So let's go back. So I'm talking about the naked chart. What it is all I've got I don't even need candlesticks. I've got the candlesticks because it makes for an easier to read. All I'm looking for are higher peaks and lower troughs. The first thing I do when I see a chart like this, actually it was like this when I started it earlier on. Now I thought, you know what, I'll do it during the show. Well, of course, we've had such a big move. But this is what I was going to do. I was going to immediately, this has got nothing to do with waves or troughs. I'm only looking at the most important left side level where I can draw the left side of the ellipse, the arch, the curve down to be able to make a cup. So now what I do is I look at that and I say, okay, if that's the left side low, and this to me is the most important right here, and we had already just nicked that high, I would have put a left side to the right side time price match there. I said, no. Let's do this. Let's take this right here. And what do? I don't go straight to the lowest low bar. I identify a particular candle. And that candle, very often it's a very small candle, but whatever it is, I have a particular methodology. And then what I do is I go left side in red because it's coming down, right side in green, and it's just a guideline. I might have to move this line a little later on. It doesn't matter. What I do is I start to go like this to the right side, and I just let it be, all right? My idea is there's going to be a cup formation. Now I start on I put a plus sign at the bottom, and I merely count each successively higher peak. So this from the low of the E-minis, the 10-minute chart, we're looking at the low of 1761.25 at 8:30 this morning. It makes a high at 8:40 at 1766, and it pulls back. It doesn't break the left side low. Instead, it holds it, starts a climb. It goes immediately above 1766. And now what happens, I call it the floating ladder. Why is it a floating ladder? Because it is leg. It isn't a peak yet. It is a leg, and it's called leg B, leg B, leg B, leg B. If you're looking at Tiger TV, I'm just moving it to the right at each higher line, that is the high bar. Leg B, and all of a sudden, at 10:10, 10 past 10 this morning Eastern Time, it goes to 773.75, and it has a second bar that's the same. And then it makes a lower high at 10:30 of 1773. So that makes peak B. All of this is now peak B until you go 25 cents, because it trades in 25-cent increments, above 1773.75. You go to 74, that starts floating leg C. And now what we've got is, we move to the right, and there's your C, continues, you move to the right again, pop, it goes right through. Wait a minute, it goes right through in a shorter time frame than you would have expected, because there's my left side, right side price time match. And what happens? It has, now, if it was less than 10 minutes, sometimes I use phantom peak. I don't want to get into that right now, although it's Technical Friday for the Chapman Wave. But what's important is that's a floating C at 1780.50 at 11:10. An hour later, you remember that it broke out from the leg B. And now the next bar is exactly the same high, so the floating ladder continues. Then it breaks out, leg C, leg C. So now we've got leg C. It's in a shorter time frame. Now, I didn't have a chance to do what I normally do, which is the inside wedge. The Chapman Wave methodology has a technique that I call, okay, you go edit, you go find, and you type in inside wedge, and you look it up. And there it is, the inside wedge. In this case, it's an arch formation instead of the cup. So you follow that, and what does it say? It explains to you that strong red line, how you can get it, how it gives you a match to the left side, right side. Well, we just had the inversion, so let me find the cup formation, symmetry in the cup formation. There, that's the one we're looking at. And it's the way I draw the line that takes you to the left side, right side, price time match. So here we are. I've got a line that goes from that bottom to that high, goes right through it, and where does it come out? Comes out right there. Where's the green line, right? Can you see it in Tiger TV? Let me just check. Everything's going well. Yep, right there. So that says that we've broken out in leg C. Chapman Wave methodology says invariably you're going to get to a D if you can get to a C, and the technicals are still good. I don't have any technicals here. I'm just showing you the naked chart, how you can use the Chapman Wave methodology to your best advantage without anything else. Any other technique you have should complement that particular technique that you're looking at. There should be, within the next 20 minutes, 30 minutes, a leg. Well, if you go above 1782.25 in this 10-minute bar, that just extends leg C, floating leg C. But if you do not, in this 10-minute bar, take out 1782.25, now I must clarify, I mean take it out. If you go to exactly the same thing, I just move my C one more step to the right until it's taken out. So this is, you see the support level? And I usually change the color here. I usually go Let me just do this. Oh, yeah. Tick, tick, tick. Here we go. Color pink. And I used to change it to style dash line. And that's the Chapman wave. It's called Chapman wave inside wedge. It's the target line. The full title is Chapman wave inside wedge target line. It gives you a projection to the upside. And I normally change the color to pink. There it is, pink. So, I wanted to show that particular technique, naked chart. But it says, wait a minute, the real thing is this area right here. Right, you see the little doji? I love when you get a doji to the left side of a most important peak. And then what I do is I cover the whole doji and I draw a line right across. I go to the most important level that I can find right there, to that bar there, that bar. This is going to be a much more extended one. And it goes out there, and it says, by 1, between 1 o'clock and 10 past 1, we should break above that level. Doesn't say that you're going to hold, just says you should get to leg D, and there's going to be tremendous resistance between here and 1784. So, hey, do I have anything on this chart other than this cup, the inside wedge, the left side, right side price time match, and my letters, A, B, C? No. Just one of the techniques that you might want to use. So now let me show you something else. In the spectrum of, whoops, that wasn't what I wanted to look at. The spectrum of, this is where, you see I've circled that little yellow. This is a 5-minute chart. I typed this in way before when we were stuck over there with that this green line. I typed in, don't ever ignore this 200 period exponential moving line. Chuckle. I put a little chuckle in because I didn't want it to sound like arrogance. It's just a fact that if you've got a line like this you've broken down and look at the resistance. You couldn't even break that resistance. And that's since you broke down at 1:30, that's yesterday, at 22:50, at 22:45. Why am I suddenly stumbling here? 11, according to 12 last night. When that broke down, since then, look how it's respected that line. Even when it got there, it couldn't go straight ahead and break over it. What it did is it went once, pulled back, pulled under it, and then pop, broke out. And even now, that 9-period moving average, that purple line, says be careful, because if you take that out, this next line, in this particular case, it's the 14-period moving average at 1776. Well, it says 17.699. Of course, the EMA doesn't know anything about your trading, that it's in 25-cent increments. Anyway, this should make a leg D in the 5-minute, and if it makes a leg D, it'll also turn out to be a leg D in the 120. I just wanted to go through that every once in a while. I don't do this very often, but every 6 months or so I say, hey, you can make it as simple as possible, or you can make it as complex as possible. I wanted to just show you something else here. One of the reasons, gone. Wrong chart. Let's see if I can find it. You can see, yeah, there you are. One of the reasons, I mentioned this about 3 weeks ago, and one of the things I said was, one of the reasons why I don't have too many colors and changes on my charts is I used to do that, and I found that it became so, oh, it looks fantastic. It looks so pretty. People walk by and they look at your computer and say, man, that's beautiful. Well, I'm not in here for the Museum of Fine Arts. I'm here to do chart patterns. And I found that I try to keep my lines as simple as possible. Sometimes it gets crowded because I need to show my subscribers what I'm thinking. But most importantly, what I do is, you see that red line? You see the green line? That is a set of deviations that actually makes up this particular indicator. But I found that you can get whipsawed crazy if you just stick to these lines. You've got to use other techniques as well. Here I've got the Bollinger Bands. I never use Bollinger Bands. I use my own because I've tried them. I don't say Bollinger Bands are bad. I'm just saying use the technique that you are used to over and over if it's successful. Don't confuse yourself. What's important I showed you the naked chart. You might want to practice some of those things with a chart that's just as bare as you can make it. It just helps you in practicing a couple of strokes. Actually, I was reading, there's this great book that I read every 5 or 10 years or so. It's not the Zen of tennis. It is the inner game of tennis. And it's really a great book. And I was just thinking through it. I keep thinking, what's the relationship? I know that there's certain strokes that I play in tennis, and I just say, wow, that's exactly what you want to get when you get the turn at the bottom in a stock. As it comes off, it's a drop kick. As it comes off, you want to get it in. Just as Jim bought the bottom, and just as Tom this morning bought the bottom, that's what you want to really do. So when I'm looking at this, I want the inner game of the market. I don't want to look back and say, oh, man, that was perfect, but I never actually put the trade on. I want to put the trades on as they happen. So the green line just says, this is very positive right now. But you can drop from 1778 in the E-mini down to 1775, and that darn green line could still be there. That's a big hit. So sometimes, look at this. The green line was continuing when it was at 1782 back at 140 on the 31st. 140. Oh, last night at 140. And then what happened? It dropped all the way to 1777.25 before it changed to red. I want other techniques. That's not the kind of hit that I like. So what I'm suggesting is, don't make your charts too complex. They look fantastic. Make it as clear as you can. Because when the change comes, as it makes the change, you don't know if the change is going to stick. You don't know whether it's going to go, in this case it goes red to yellow to green. That little yellow bit there, you don't know whether it's going to go back to red or go to green, or in this case go to green. And the moment you see it's green, it turns red. So please, I love the technique that I've developed of just counting the peaks and using my discipline of stops and buy stops. So that to me is a big help. Now, let's just go on with our story here. So I'm going to go through a couple of things that I want to look at. Because it is Friday, it's the end of the month, I want to show you something. I don't care what the candle is today. You cannot get to 16,589 for the monthly chart to extend leg D. The weekly chart has made a peak D at 16,588 December 31st. Doji candle, another beautiful signal to say, be careful. Followed by a second doji candle and a down move. And what we're looking at is that we've broken some very important support levels. But I wanted to introduce something else that is not on my CD. I spoke about it last week. It's a little messy, so I don't want to make it messy. I'm going to do it right there. It's this chart in the middle, right there. This chart here. You see that pattern? It's called the stalk leg formation. Chapman wave. This goes back to the 1980s. Some of you weren't even born. Chapman wave. Stalk leg formation. And what's really important about this, you remember last week what I was saying, is that there should be a move to the downside that takes out 15,658, the high of the body of the stalk formation. What was the low today in the Dow? 15,617, and it's the beak. I'll explain it when we get back. Be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. We're back. So this is what I wanted to show. This particular Chapman Wave stalk leg formation, it's very simple. Here's your little diagram. Why is that doing that? Here's your diagram. There's a long leg. Now, this is different to leg A, B, C, D. This is just a line, like a straight line that goes up. You know how a stalk likes to stand? Well, it doesn't like. That's what it does. It stands on one leg, and then it's got this long body, this heavy body, and it's got the wings, and it stands on this one leg. It tucks the other leg underneath, and the wind blows and everything, and there it is, just beautifully poised. Then you get the neck. You get the head, and the head sometimes is no more than a bar or 2 of sideways movement, and then you get the beak. Now, the rule of thumb is you got your long leg, you got your body. I used to, at the very beginning, call this the fulcrum, like a propeller shaft, and expect a 1-to-1 move from the body as the middle is the rotator, and you get an equal move to the upside like a propeller shaft. And then I found, no. It happens, but the most important thing is it extends up above the body. And then what happens, it comes back down. The rule of thumb, two rules of thumb. One is that when the beak begins, the down move, the final down move, it goes into or under the body. And that's going to dictate to you how deep the whole correction is going to be. If it stops, just nicks the body as it did today, and suddenly turns around and has a fabulous move to the upside, that's something. Now, the other rule of thumb is when this concludes, it invariably has a fabulous takeoff rally. But you're on your own after that. It goes to different patterns. So what's the rule? A long leg up, sideways body, breaks out above the body high, in this case 15,658, the high of the 2nd of August of 2013, starts the neck. Could have a little pattern on there, but it's okay. It goes all the way to the head, which was a doji high, 16,588, makes the head, and then it's the beak, and this is in the beak phase. So the MACD is very negative. The stochastic is terrible at 75%. This is the weekly chart. So I don't see this stopping. Yep, you could get counter trend bounces. That's all it is. So this chart I've got to get rid of. So take one last look. I cleaned it up quite a bit, but this is not the chart that I want to keep here. It's gone. Do not display message, gone. Okay, let's go back to my normal one, which is this one here. A little busy. Okay, so let me give you my analysis quickly as we're about to go. Don't forget, Nico and Paige, fabulous show coming up. Now, let's do this. So the Dow made a low of 15,000, quickly, 15,000 low. I don't want that. Where's the 120-minute chart? Oh, don't mess me around. Made a low this morning of 15,617. I suspect at some point we're going to take that out and we're going down to the 15,200s. That's the next stage, but not yet. Anything can happen between now and the close, and anything can happen because it's the end of January. A lot of things are going on. What I want to do is to show you that the weekly chart says you can bounce. You can even have a strong bounce to the 16,065 to the 16,160 area, but then you're going to make an H pattern and probably come down. My monthly chart says that the Dow is making a peak D. It's confirmed. Other peak Ds can be very sharp, but sometimes you get a D and it's just 1 month down and then it goes back up, but not when you've been extended for this amount of time. And I suspect that we will get peak D in the monthly S&P this month coming, February. In other words, I don't think that the S&P will make a new all-time high at all. So stay tuned. You've got Nico coming up. And just one last thing I wanted to say is that the volatility index on a monthly chart, on the weekly chart, it depends how we close today. But so far, it is closing. If it closed right here, it would be testing, as it did earlier on, the inside track resistance. If the VIX goes above 19 next week, what?
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
You're watching Tiger TV.